I'll turn it over to you.
Okay, well, great. Thank you. And let me say a couple of things. First, thankfully, Verizon fixed their problem because I couldn't get this to work on my computer, so I'm on my phone. If I drop, it's not my fault. It's Verizon's fault. Uh, Secondly, let me apologize for having to talk about insurance right after lunch. Uh, it can either put you to sleep or make you sick to your stomach after lunch because what's going on in the insurance industry as it relates to religious organizations is becoming more and more difficult. Um, as the market changed with the weather change, um, certain companies got really antsy about the property risk. That seems to be what's driving most of the reduction or the shrinking of the insurance market. But couple that with some of the general liability issues that are going on along with auto liability and so forth. So what I thought I might do is just sort of categorize those issues into property liability, vehicles, and then excess insurance, and then just sort of open it up for questioning if you have any questions after I finish. From the property standpoint, the biggest challenge for churches is centers around the older churches and the older buildings. Any building that's over 50 years old becomes very difficult to insure in a standard market because of the fear of fire safety. If a building has been renovated, and that renovation would include plumbing, electrical, roofing, and HVAC, all four of those, you can consider your building to be newer in scope. Here in the South, we have, and I don't know where everybody is located today, but in Georgia, we are in what's called a hail zone. And as the weather moves through both the hurricanes and the tornadoes, we are in a particular area where hail becomes a problem, particularly with shingled roofs. So most carriers are either restricting their coverage on roofing to be either actual cash value, or they're moving towards what's called a percent deductible. Typically, insurance is written on a dollar deductible, and that dollar amount is budgeted. But when you have a percent deductible, basically, if you had a 1% deductible, the deductible would be 1% of the value of your entire building. I insure a church that's really large, and they keep adding on to their church. They have a family life center, they have an event center, a chapel, and everything is sort of bolted on to the primary church. And so now that one building constitutes somewhere in the neighborhood of 50,000 square feet. And 50,000 square feet to rebuild these days would be ridiculously expensive. And so basically they're insuring their roof for nothing because they have a 1% deductible on the roof. And that's about the cost of what the roof would be. So it's become very onerous, and they're finding it very difficult to swallow the terms and conditions of the insurance policy. In addition to the old buildings, any buildings or any structure that has what's known in the industry as an amount subject or an amount subject to a single loss, that would be a cluster of buildings within a certain area that exceeds $25 million. Two of the biggest markets that we have that used to be very stable and great church markets would be Brotherhood and Church Mutual. Both of them have been downgraded by the rating agencies to a B plus. And because of that, they are very mindful of the fact that they don't want to have a single loss that might jeopardize their rating further. So they're limiting the amount of coverage that they are agreeing to write. Now, we have other companies that are still in the game. Utica is a national market. Selective is in most of the eastern states. But it is becoming a very restrictive and very small marketplace. State Farm, Philadelphia, and Nationwide used to be big players in the market, but they have now started to restrict their writings as well. One of the drivers of the value of insurance is the fast rising replacement costs. If anybody's had some work done, and I think on the call somebody was talking about getting some work done at home, repair work and replacement work is not cheap anymore, and it becomes very difficult to determine what a true replacement cost is. And my recommendation is to get with your agent every year and sort of go through what you anticipate that replacement value of your facilities is. Things that you might be able to do to limit the rate increases that you might receive is looking at increasing and budgeting for a deductible. The average church doesn't really have a property loss claim, but maybe once every 7 to 10 years. So if you do the math, if you save an amount of money, that money savings could be used for that one event that you might have every 7 years. But we're looking at now $10,000 to $25,000 deductibles on larger churches just to try to eliminate the desire to report a small loss, because every loss that you have is a strike against you. And when you have several strikes against you and your carrier then cancels your policy, then you have the cancellation on your record, and it becomes even more difficult to get a new company to want to take on a risk that another company has gotten off of. From the general liability standpoint, the real a couple of issues that are arising in the churches is obviously the abuse and molestation exposure and what you're doing around it. It's not necessarily that there's this fear of it happening, but they're wanting to make sure that you're prepared in the event that it does. And so if you have an abuse policy in place, it needs to be looked at and make sure that it's up to date. I highly recommend doing background checks on all employees as well as all volunteers, particularly if you have a ministry that supports children and or older adults. Those seem to be the areas that most of the losses occur in. And so having a company like Presidium is a company that puts together abuse policies and training for your staff. And I highly recommend looking into a company like Presidium to go through that process. We've gone through lately a thorough analysis of the churches that we insure and are looking at their vendor agreements. If you have a kitchen, are you subbing out the cooking? Are you subbing out your janitorial, your landscape, food service, or even security? And then looking to make sure that the agreements that you have in place are protecting the church's best interest. I could help you find some samples if you would like, if you have any questions about those type things. But sometimes the best insurance is prevention as opposed to a premium and a policy. And so we spend a lot of time looking at those prevention items like agreements and tying things up. We have one church that has an agreement with the Boy Scouts, and unfortunately the Boy Scouts have a target on their back. And so anybody who has an agreement with the Boy Scouts needs to make sure that there is an agreement in place with Boy Scouts of America that they take the responsibility and remove that responsibility from the church. One of the other big topics that comes about is the vehicles, and it's not just what was, and I'm sure all of you have had this explained to you, but a 15-passenger van has a propensity to turn over. So insurance companies got away from wanting to insure anything that had a 15-passenger van. They wanted you to move to minibuses or buses, but even that, the transportation of people becomes a very difficult issue for some insurance companies. Um, Larger churches even have the exposure of golf carts. And golf carts, while they're on your property, are called mobile equipment. Once they get on the street, they become a vehicle and they're no longer covered under general liability. So you've got to make sure that your carrier is aware of your exposure if you do have a golf cart taking people from one parking lot to another. The last piece of the auto insurance puzzle is the personal use of employees' vehicles. So you have a pastor who is going to the hospital to see a parishioner. You have someone going to the bank to make a deposit. That exposure is called hired or non-owned auto liability. And it is an imperative coverage that you need to make sure that your policy has in place because you have an exposure for anyone doing work on your behalf. And attorneys are now going after not only the personal vehicle, but the company that they're using that personal vehicle for. We've looked at other things. We've looked at employee handbooks. If you have employment practices liability, I would make sure that your employee manual is up to date and has all of the abuse policies and the termination policies and the rules and regulations. But since the laws in each state are different, you really need to make sure that you're addressing that with an attorney in your town or your state that has knowledge of those state regulations to make sure that you're in compliance in that employee handbook. And then sort of the last thing that is a hot button right now is excess liability. Overnight, insurance companies started running away from large limit policies. $1 million is standard for a package policy or property and liability policy. And then typically we were trying to get coverage for an additional 5 million. Selective Insurance Company has started limiting their umbrella appetite to $1 million, and we're having to go outside that $1 million to get an excess over the excess. And it gets more expensive if you have to do that. And so you might just prepare yourself for an increase or an escalation in premium if you're looking for higher limits. And then within those higher limits, you might ask, is your umbrella coverage over and above your abuse and molestation coverage, over your pastoral counseling coverage, and over your auto and liability coverages? Other than that, churches are like everything else. You pay a premium and you want to make sure that it's getting paid because you certainly don't want to have marks against you for cancellations, whether that be for underwriting reasons or for non-payment. So I think I have covered really all of the areas of concern that I see on a daily basis. I will tell you that it seems that the market has shrunk to a few. And those few, if you have these companies insuring you now, you're probably in good shape. If you're with Brotherhood or Church Mutual or Southern Mutual Church, expect some restrictions. But Utica, Selective Insurance Company, Guide One, AmTrust, and Great American seem to be the markets of choice now that we have here in Georgia available to us. I'm sure I bored everyone with that dissertation, but
No, it wasn't
anybody have any
boring at
questions?
all. It wasn't boring at all. I think this is very interesting. So I do have a question, and I'm Sherry Maxwell from East Friendship Baptist Church in Washington, D.C. And almost 2 years ago, my husband passed. He was the pastor of the church, and several people said to me, churches, pastors, they asked me, did we have key man insurance? Are you able to speak to that, what that is, and is it necessary that churches have a key man policy? And my
Well,
question to them was no, I never even heard of it.
so basically, it's just life insurance that's payable to the church itself should whoever you're insuring the life for pass away. There's a church locally in town that we have a very dynamic preacher, and he's on TV and he flies to California, and he's all about being him. If he disappeared overnight, that church would be in a world of hurt. There's not really a plan in place to immediately replace him. But that's what a key man policy would do. It would give the church money to go find a replacement, and it can insure that individual for a reasonable amount. So Jensen Franklin is who I'm talking about. I don't know if anybody knows who Jensen is, but Jensen, without Jensen, Free Chapel Church here would dissolve, I'm afraid, because it would take a number of days, months, years to find a replacement who would be as dynamic as he is. But if you're part of a church that has a plan for pastor replacements, then I don't know that it's necessary.
Okay.
Yeah, thank you for addressing Keyman Insurance. We had the same issue when we refinanced our loan, where the new bank required Keyman Insurance, and we had a devil of a time trying to get someone to cover our pastor. I mean, there was like one historical glitch that he had from his health, and they jacked the rate up so high, and then they were just the exclusions in the policy. Basically, the bank said, it's really the policy is almost worthless. Now we can go back and look at it when the anniversary date of the renewal comes and search somewhere else. But that initial go of trying to find the key man was like pulling teeth
Yeah.
for us. I
So
mean, I'm in Northern Virginia.
I'm a prostate cancer survivor. I had prostate cancer 5 years ago, and I am the CEO of my company. We are a very large insurance agency, and we tried to get Keyman on me, and it was almost impossible. I mean, we could have paid it, and yet, to your point, until I am clear in their eyes with a certain number of years and have multiple tests done, it would be difficult to get insurance for me or anyone with a health problem.
Mm.
Has anybody experienced personally the trials and tribulations of trying to replace your policy lately?
No, we haven't. But I like what you said about reviewing the policy with the agent on an annual basis. We now have a new pastor, so I think with Pamela and Rhonda, we can recommend that our pastor, sit and go through the policy and also meet with the agent so that he.
And when you do, ask your agent, who did you go to? What are the markets that you went to? And again, I think it's important to have an alternative, because I'm not suggesting always to move, but the company that you're with doesn't know where they should be unless there's competition. If you just renew your policy annually, there's going to be a 7 to 10 to 12% increase every year until they have a reset. And that reset is someone else going and trying to win the policy the first year. And then they will go through and they'll increase those annually. But I think it's very important to shop your insurance at least every other year. I don't know that it's every year. If you did it every year, you get what's called being shop worn. Companies see the same risk over and over and never have a real opportunity to write it, so they quit working on it. So every 2 to 3 years, you should probably get back out into the market and see what other options you have.
We will pass that on to our trustee ministry so they can be prepared for that. Especially this year, we haven't we've had the same, we're with Brotherhood Mutual, and we've had them for I guess, ever, at least 16 years. So,
Brotherhood's a great company. And until they got into some financial trouble, they were rocking along with the market to be insured by either them or Church Mutual. But with the weather primarily here in the South, they took some sizable claims and losses that affected their financial stability. And so when they lost their rating, they became very selective in what they would want to write to try to make sure that they could repair that rating back to an A. I think they will get there, but I insure a very old church in Marietta, Georgia, and they had 2 lightning claims that took out their organ, and the first organ replacement was like $120,000, and the second one was a $60,000 loss. It became very, very difficult to insure a church that's over 50 years old with 2 lightning losses. So what they had to do to prove that they had skin in the game is they put lightning arresters out. They rewired their church, and then tried to do everything that the insurance company had given them in the way of recommendations. How old is your church?
we're 73 years.
In the same building?
We've been in the same building for probably at least 65 of those 73, I'm guessing. Minister Anderson, do you know? I don't know how long we've been in the building, but
God has blessed you for a long time.
yes, he has.
It's just, I just would be very mindful to make sure that you're keeping records of all your maintenance that you do, and go back in time if you can to show what kind of maintenance that you have, maintenance records you have, checking plumbing, heating, electrical, and then I know it's an expensive ask, but roofing age is becoming a bigger problem year in and year out.
A few years ago, Brotherhood, we replaced our roof, and Brotherhood was a part of, supporting us in that area. So I think Pamela has her hand up.
Hey, good afternoon, everyone. Very interesting information. I have 2 questions. Presidium, how do you spell that?
That was my question too.
I am a Georgia Tech graduate with a math background, so my spelling is not all great, but it should be Presidium.
Okay, Presidium. And then, and I like that because we do have children's ministry, and I think right now we're pretty covered as far as background checks. But then my other question was vendor agreements, and you talked about things, and you said an example was with Boy Scouts. It's ironic that we're in the midst of one of our members building a memory bench, and he's a part of Boy Scouts. So when you said that, it kind of rang my ears. What can you explain a little bit more? Because can
So
you just elaborate on that a little bit more about the Boy Scouts and insurance?
So the church that I insure, 2 of the churches that I insure have cabins that they rent. So it's their facility that they're renting out to the Boy Scouts. I think it was 45 years ago, they had a scoutmaster who sexually abused some kids, and Georgia changed their laws to take away the statute of limitations, and it opened it back up. And so the church was named because the church had an affiliation with Troop 26, and Troop 26 had a scoutmaster, and then even worse, the Troop 26 scoutmaster was the deacon of the church. So it was very hard to run away from the fact that they were interconnected. And so today what we're doing is making sure that there's an agreement in place that says we have a hands-off relationship. We have a relationship with you as a tenant, and you are responsible for your actions, and we are to be held harmless and indemnified. The hold harmless and indemnification agreement then places your defense on them and their policy and not yours. So we have a church that also leases out part of their building to a Vietnamese group. It's a different church. And it was my recommendation that we get the Vietnamese church to get a general liability policy and name our church as a named insured or an additional insured and hold us harmless. Because what we feared was we control the volunteers at our church. We control that. We do the background checks for us, but we don't know if they are doing it. So we don't want to be held responsible for their actions. We want to make sure they're held responsible for their actions through that agreement. And that agreement just says, you know, you're you and we are us, and we're going to stay separate.
I have a question for the other churches. Do you all do background checks for volunteers outside of the children and youth ministry?
We do.
Oh, so you're doing background checks for a whole lot of people, right?
Yeah. All of our leadership are required to go through the training.
So that's part of the Presidium contract. They have background check capabilities, and they give you a set price. I don't know that they're the only one, but I do think that if nothing else, you should do background checks on anyone who has any interaction with children, young adults, and the elderly.
Okay.
Bob, you asked if anybody's gone through finding new insurance. I know Reverend Helen did a few years ago and had a real tough time. My home church, I'm not on the leadership right now, but I know they were with Church Mutual and had a few claims and got dropped by them. And so, you know, had the 30-day scramble to try to find somebody. And their rate went from something like 20,000 a year to 66,000. I mean, it was 3x, right? I mean, it was a huge jump. And it was, I think they have told me they went to 5 different carriers, and this was the only offer they could, the one option. there was no option, right? It was the only thing they had. So that, yeah. That's
so that brings up a point of not waiting until the end. So typically we start the process 90 days prior to renewal. And the first thing we try to do is go to the renewal carrier and say, what is your renewal rate? And then we talk to the church and we tell them, here's what the renewal is. And we either go to market at that time, or we just acknowledge that that's the premium and we're going to stick with it another year. It's when the companies go up in rate and start then restricting the coverage that you were accustomed to, that becomes a double dipped whammy that becomes very difficult. The hard part is that if you don't stay on top of it, the next company, let's say the company went to a percent deductible, it's going to be hard to ever get back to a dollar amount deductible, because your policy currently is percent deductible, and the new company, even if you change, is going to want to keep it current with what you have. That's why I suggest the 90-day rule of staying on top of it and finding an alternative, so you'll have some choices instead of waiting until the last minute to know your choices to just pay 3x.
Yeah. Melvin?
Yeah, I had a question related to sometimes we will have events like we call it a Holiday Harvest or a Halloween alternative in our parking lot, and we invite the church down the street. Well, we can't control whether or not they do a background check on their children and youth people that come to serve here. Would you recommend, if we invite them, that we would ask them to list us as co-insured on their insurance policy if they come onto our property? Or how would you
Yes.
recommend we manage that?
So in any event, you should have a facilities agreement, a
Hmm.
rental agreement, and it can even be for $1. It has to have some consideration, but you could rent your space for $1 that gives you this right for them to sign an agreement accepting responsibility for that. The problem you're addressing, though, is difficult because it's your event and you're just inviting them to participate in your event. It's no different than you inviting the general public, and you're not asking the general public to provide you coverage. But if it's a co-sponsored event, absolutely, they should provide some coverage through their insurance. But I would recommend a facilities agreement that outlines what that requirement would be.
Thank you.
Do any of you rent your space for civic groups?
Yes, we do.
So that civic group should also have a facilities agreement. That agreement should require that civic group to provide insurance.
Right. We went through a process of first of all, we screen who the requester is, making sure they're 501(c)(3) and they align with our values. And then we take it from there in terms of more or less it's a minimal fee, a pass-through fee, if you will.
One of the things that came out when I was doing a little bit of this research was summer camp. A lot of churches might have a separate summer camp, and they might own facilities elsewhere. Typically, what we try to recommend when you have an exposure that is outside the scope of the church itself is that to create a different entity. I have one church that does ministry for auto repair for those unable to pay for their own auto service. And then they have volunteers who come in and work on vehicles. They don't do any body work. They're just doing, or brake work, but they're doing oil changes and things like that. They separated that entity into an entity of its own and got separate insurance for it. And then that entity is providing a hold harmless agreement for the church. So they're sort of acting as if it was an outside entity, an arm's length transaction taking place. But I think if you have some exposures that are outside and fall outside of the normal scope of a church, it might be prudent to look at removing that exposure and separating it out into its own.
Bob, do you do anything with like cyber liability insurance, electronic, that kind of stuff?
Yeah, excuse me. I skipped over that part. I meant to include that in my general liability conversation. But yes, cyber liability, cyber insurance has evolved. When cyber liability first came out, it insured you for your fiduciary responsibility to keep private information private. And it's rare that the church would have bank account numbers or social security numbers or HIPAA information that is and should be kept private. But that being said, you manage your church on some operating system, even if it's QuickBooks. And if you have your network open, then a bad actor can get in there and hold your accounts hostage. It's really called malware or, excuse me, name just popped out of my mind. But it covers you for that. But lately, the world of cyber has jumped from your liability or your responsibility for that information to real money. And that's called cyber crime or funds transfer coverage. If you transfer or wire funds, you will definitely want to look into cyber liability. And one of the coverages is called social engineering, and that's where someone hacks into your system and sends an email internally that says, hey, send that payment that we're supposed to pay the plumber who did work, just send it electronically and wire it to his account. And then you willfully part with that money. Someone didn't steal it from you. You were just tricked into parting with the money, and that's called social engineering. And that too is a coverage covered by a cyber crime policy. So you have cyber liability and cyber crime, two different exposures. I'm assuming most of you have your tithing available through an online payment system. If you're using a third party, you're probably okay. If you're doing it internally, you're going to need to look at cyber crime insurance. Now I think I've put everybody to sleep.
No, we're thinking, right?
You're speaking our language here.
Yeah, there's a whole lot that goes into what you are trying to insure, and depending on the size and the complexity of the church, your needs may be different. You got a startup church down the street that's got 100 parishioners. I don't know what their needs are. That is the other one that I insure down the street that has 1,200 members and a family life center with a basketball court that allows league games, and those league games are a whole nother exposure. So it just kind of unwinds.
Oh man. Yeah, one comment and one question. We just we're with Guide One, and just renewed. And I was, we had a, I don't know, 10 or 15% increase. I guess we had some credits that expired, so we weren't getting into the credits anymore. I was surprised we increased our deductible from $5,000 to $10,000, and I was surprised that we saved almost, I think it was over $3,000 in a premium payment. Like, I was surprised we saved that much for increasing the deductible by that amount. And we have.
So
and part of my thinking was we have money, so we can do it. Yeah, go ahead. Sorry.
Yeah. So my first rule of thumb is to get options and find what that savings would be. And knowing that you went from a $5,000 deductible to a $10,000 deductible means that you only changed your exposure by $5,000.
Right.
And if you saved $3,000 in a single year for a $5,000 difference, then basically that would mean that you're paying $3,000 for $5,000 worth of coverage that you're not going to have a claim on, but once every 7 years.
Exactly.
But that's not why I'm recommending a deductible increase. I'm recommending it because you can't afford to turn in the $10,000 claim. Once you turn in a small loss, I'm not saying if you had a $100,000 claim, you have a $10,000 deductible. That's understandable. But when you have a $10,000 or an $11,000 claim and you turn it in, and all you're going to get is $1,000 because you now have a $10,000 deductible, it's not worth the mark that goes in your file as having paid a claim. It's not what profit they're making from you, it's your activity level. Frequency leads to severity, and therefore the more small losses you have, the propensity for you to have a large claim later is greater than if you had no small losses. That's the rule of thumb for insurance companies. That's part of their underwriting guidelines.
So increasing the deductible is then means we're less likely to have, yeah, we're less likely to have claims, right?
Because if you had a $5,000 loss and you had a $5,000 deductible and you had a $12,000 loss, you're probably going to turn that in and get $7,000. But
Right.
now if you're at 10,000 and you have a $12,000 claim, you're going to think twice and say, yeah, maybe I won't turn that in.
Yeah. And I mean, do you have kind of a rule of thumb of, what you think is worthwhile, or is it dependent on how many previous claims you've had?
I think it's worthwhile to reach out to your insurance agent who you've hired as a trusted advisor and get their advice, because each state may be different. He or she may have, a better relationship with the carrier that you're under. It's going to be an individual circumstance, but I think it's worth the conversation to talk to your insurance agent. And if you don't know your insurance agent, you should find one that you get to know, because that's the most important. I have a relationship with all of my clients, and I become their trusted advisor just as if I was their attorney or CPA.
Good to know. Yeah.
Any other questions?
This has been very helpful. Thank you so much, Bob.
So
Super.
whoever recorded this, send it to Chat GPT and fact check my my statements.
Well, then we'll send it back to you, and then you can fact check Chat GPT.
Okay.
Thanks for your time, though, Bob. I really appreciate it. Thanks
You're
on
welcome.
behalf of all of us. Yeah.
Thank you very much, Bob. Appreciate everything.
Thanks for inviting me, and I'm happy to help.
Yeah.
Thank you
Thanks,
so much.
Jerry.
Thank you.
Yep. Thank you.
Bye.
Have a good afternoon.
You too.
All right. Well, again, thank you all for coming today. I thought that was very informative. Thank you for arranging it, Aaron.
Absolutely.
Just a little bit of business to take care of today. Did Renee send us the minutes, Aaron?